Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 816A, and today's date is November 12th, 2015, and the title of this episode is Russia Takes the Next Step, Launches Crude Benchmark to Bypass the Dollar. Now, before I get started, I just have an announcement to make. Tomorrow, Friday, I'll be uploading an interview with Jeff Nielsen. If you're on the X22 Report Spotlight YouTube channel, you should get an email from YouTube. If you are signed up to the X22 Report email alert system, I will email you letting you know when this has been uploaded. Or you can just come over to YouTube, type in X22 Report Spotlight. You'll see the video, or come over to the x22report.com site, scroll down a little bit, look over to your right, you'll see the video there, or you can go to newssentinel.com and you can find the video on that site. Let's get right into the economic collapse financial news. Let's head right out to Greece right now, and we're starting to see that things are starting to break down. The people out in Greece basically had enough already, and we're seeing one of the first strikes and the protests occurring after the deal was made to bail out Greece. And this bailout is really no bailout. Basically, it's a plan to put the country further into debt. And as time goes on, things are just going to get worse and worse. And right now, the people are out, and they were chanting in rallies held in Athens, and they are just fed up with what's going on. And they brought basically everything to a screeching halt. For about 24 hours. Schools, hospitals, banks, museums, pharmacies, public services. Basically, they did a 24-hour workout. And this is something that the bankers need to be aware of, is that the power of the people is very strong. We are a society made up of many, many, many individuals. And when we join together, our power is unlimited. And this is what the governments, the central banks, fear the most. This is why they continually keep us divided and keep us arguing about fringe issues. They don't want us as a people coming together. They can't have it happen. Now, out in Australia, they've come out with their job numbers, and they said, listen, we've added 58,600 jobs in October. This is the biggest monthly jump since 2012. And the vast majority were full-time jobs, and it looks like everything is fine. What's very interesting about Australia, it looks like the media, the corporate media, is questioning the numbers from the government. Basically, the corporate media in Australia is saying, they don't believe the job figures for October. They're telling everyone to be skeptical. Treat with extreme caution. Nearly 60,000 jobs created in Australia last month. A fall in the jobless rate in Victoria of 0.7% points. Something's wrong here. Now, this is what the corporate media was supposed to do. They weren't called the corporate media. They're supposed to be journalists, investigative journalists, to keep the governments in check. But of course, they're not doing the job, so then all of a sudden, we need another type of news media to call them out on different things, and that's how the alternative media was born. But we see in Australia, I'm not saying in all portions of it, they are definitely calling out the government, saying that these numbers are fake, and they wouldn't be surprised if next month if they're revised lower. And we'll have to wait and see how that goes. Now, here in the States, we are continually seeing this economy declining. It's getting worse day by day. I mean, look at the stock market today, down 250 plus points. We have been seeing a fluctuation in the market since August. Now, we know they have the high-frequency traders, the plunge protection team. They do whatever they possibly can to keep the market up. Sometimes it doesn't work that well. And this is how you know it's not a free market. This is how you know it's a controlled market. Today, the market fell, and it's basically tumbling. Now, of course, they're going to try to boost this up for Friday because they love happy endings on Friday, but we'll have to wait to see. But when we look at the other economic indicators, what do we see? I mean, we are seeing U.S. freight and rail deliveries continually declining. Transportation is a gauge into how well the real economy is doing. And it's just continually getting worse. In October, the number of freight shipments in North America fell from September. So basically, we're seeing a constant decline of freight deliveries. We're seeing a 5.3% decrease, and this is the worst since October of 2011. And this is coming from the Cass Freight Index. We are seeing that the railroads, they're reporting October traffic was down 4.3% from 2014. Their carloads dropped 20.7%, and intermodal fell 20.3% from the previous month. And we have to remember, the goods that they're shipping around the United States depends on what the people are doing, what businesses are doing. Are they purchasing? Do they have jobs to make that extra money to go out and purchase? And we're not seeing it because we're seeing that stores, their revenue is falling. Macy's, Banana Republic, and many other retail outlets are saying sales do not look good at this point. Of course, they're blaming everything else except for the economy, except for those people that don't have jobs. And if they're not purchasing, then the freight and the railroad do not have to deliver. If they don't have to deliver, the factories don't have to produce. This is why we see a decline in freight and railroad and in manufacturing. And if manufacturing is not producing, guess what? They don't need the raw material. This is why we see the Baltic Dry Index dropping once again, another 20 points to 579. At this point of the year, we are going into the holiday seasons. This is when people go out and purchase items. This is when stores stock up. This is when manufacturers go overboard to create. We're not seeing it. We're seeing the opposite happen. This number right now should be close to 1,500. It's completely more than half away from where it's supposed to be at this point. And we are starting to see the same exact patterns that we saw back in 2008. They haven't gone away. I mean, most of the time, a stock market crash doesn't just come out of nowhere. Normally, there are very specific leading indicators that we look for that will tell us that a major trouble is on the horizon. One of the leading indicators is like junk bond market. Right now, closely watched, a high-yield bond ETF known as JNK is sitting at 35.77. If it falls below 35, we have a red flag. And it'll be the first time this has done so since 2009. So far this year, nearly 300 U.S. corporations have seen their bonds downgraded. That's the most downgrades per year since the financial crisis of 08 and 09. Because what we're seeing right now is something that looks very, very close to 2008. Now, of course, as we know, the Fed, they have the ability to continually pump the market up. They are the masters of this. And we know they want a controlled crash. We see the Fed is out there, St. Louis Fed's Bullard, and he came up with the idea that the economy now is very close to being normal, except for ZIRP, except for the $4 trillion on the balance sheet of the Fed, except for retail contracting, except for house prices starting to fall, mortgage applications declining, truck, railroad deliveries completely declining, except for manufacturing in a huge decline, except for the global economy declining, except for the Baltic Dry Index, which is continually declining and imploding on itself, except for unemployment, where they're continually throwing people out of the unemployment arena and not counting them anymore. Except for all of that, we're close to normal. Remember, whatever the government, whatever the central bankers say, it is always the opposite. Now, something strange is happening on the coast of Texas. We are seeing a gargantuan oil traffic jam of tankers. I mean, they are backlogged in Houston. And there's a backlog of about 28.4 million barrels. We have a glut of oil right now. Saudi Arabia is continually pumping out more and more oil. There is no demand for this. Prices are falling. Of course, we know the United States is behind this to put pressure on Russia to destroy their oil industry, to put pressure on China, and to keep the economy here in the United States alive, which keeping these oil prices down allows businesses to be more profitable. Because as oil prices continually come down, this is a savings. Because as we know, these companies, they're manufacturing, they're delivering, and this saves them billions and billions of dollars. Russia right now is taking the next step. They are launching a crude benchmark to end the dependence on the dollar. Now, we've seen them come up with their own payment system. We've seen them dumping the dollar and trading with China and other nations using their own currencies. We see them trading with Iran, not using the dollar to trade their oil. And now Russia's oil benchmark is going to come online. And they've been working on this for several years. Now, to be recognized as a benchmark in the international market, Russian crude has to meet the following three requirements. It has to be traded at a clear and transparent price. Its deliveries have to be guaranteed. The trading volume has to reach not less than 10 to 15 million tons per year, or 3 million barrels a day. The Russian Energy Ministry expects that the first trading would take place before the end of 2015 or in the beginning of 2016. As a result of all this, they're hoping that the market mechanism of pricing for Russian oil would form with no dependence on foreign-produced crude benchmarks, which will allow oil to be sold at a higher price. And this is basically setting up a system that is going to rival Brent crude prices. And this is going to put the U.S. in a troubled spot, because we see China and Russia continually making parallel systems to what exists today, because everything right now is flowing from the west to the east. The system is dying. The system is being transferred over to the east. And like we said, the dollar is dying. This country, especially with the TPP, if that's passed, this is going to become a third world nation. Our way of life is going to be over because of the central banking system. And before this happens, we know they will start a war. And we know they will push and provoke as hard as they possibly can to get this started before this entire economy collapses. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.